Hi everyone. In this video we're going to talk about closing entries. Closing entries must be made to our temporary accounts at the end of each period to reset them to zero. Let me show you the data set I'm using. Over on the left hand side I've highlighted this area that shows the accounts that are considered temporary accounts. These include all expense accounts, revenue accounts, you may have more than one, and dividends. So these are all temporary and we reset them at the end of the period, as opposed to, now if you look over on the right, I've got some highlighting going on there for your liabilities, assets, including contra assets, equity accounts. All of these accounts are considered permanent accounts. We do not reset them. So to reset or close the account balances, we have 4 steps that we go through. And typically the first 2 especially have to be in order. Then 3 and 4 can be reversed. If you want to do 4 before 3, that'll be fine. And I've just picked up the first word of each item, each account type we're closing. And so you can make it red eye, ready, read, whatever helps you to remember this, then that's what you should use. I will close revenue, then all the expense accounts, then the income summary account, which is used specifically for this purpose. We don't use it for anything else. Now this is not your income statement. This is the income summary account, and then dividends. So this is the process I'm going to go in, but again, if it helps you to remember, red eye or ready, then you can reverse the last 2 if you want. That won't make a difference. The first 2 will make a difference. Okay, just reminding you that debit is equal to left or means left, credit means right. Different accounts increase on different sides of the account. So revenues increase on the right hand side of the account. This is also their usual or typical normal balance side. If they have a balance, it's normally on that side. So in this case we have 2 different revenue accounts. And let's see, I believe they were commissions revenue and interest revenue. I've just gotten the word revenue here. These are the balances that are shown. So to reset them to 0, we need to debit these accounts for the same amount. When you have this number over on the left hand side as well, for instance, when the journal entry is made and you debit this account for the same $1,300, we've got $1,300 on both sides, so that makes a 0 balance. Let me get that back off now. And then we'll do the same thing with our expense accounts. Notice they all have a balance on the debit side. We are going to need to credit those accounts to 0 them out. Dividends works the same way. It has a normal balance side on the debit side, and so we're going to need to credit this account in order for it to have a 0 balance. So down at the bottom you see the account that we call the income summary account. So when we prepare our journal entry, let me slide over there now. Let's make the first one. Close the revenue accounts into the income summary account by debiting both of those accounts. So commissions revenue, and again the data is up here at the top from the this is from the problem that we talked about, and I also have the dividends here with that amount, so you can see what we're working with. So we are going to debit the commissions revenue, and these are not in order. I just almost intentionally left them kind of mixed up so that you would get in the practice of identifying which accounts you need to pick up. So commissions revenue, interest revenue, both of those have a credit balance, so we need to debit them. And this is what you see. Debit both of those accounts, and then you're going to credit income summary for the total. So just adding up the total, we get $14,050. So after you remember, when you make that journal entry, record your journal entry, then you would post into your ledger account on the same side that you made the journal entry toward. So in this case, it was $14,050. Remember, and so I credited this account for the same amount. Okay, next step. Step number 2 is to close the expense accounts. They all have a debit balance in this case, and we need to credit those accounts for the same amount. If you were to have a credit balance, you would just work that in the mix as well. But in our case, they all do have a debit balance, as we would expect. one 2,600, 1,400, 1,700, 6,000. So we need to credit all of those accounts. So notice that's the second part of this entry. You don't just put total expense and the overall total for your expense accounts. You must list each one and the balance in each one. Now notice that the first account that you actually list, because debit always goes first, is the income summary account. It does take the total. So the total of all of these accounts added together, and I used Excel to do this for me, is, I've got to fold my screen back up so I can get out of there, is 11,700. So let's take that amount. Now we've prepared that journal entry. Let's take that amount over to our income summary account. Do that a little better. Kind of moves around on me a little bit. So 11,700. And again, that was the total that we just posted in the journal entry we made a moment ago. So now the next thing to do, if you look at your step 3 up there, is to close this income summary account. The income summary account itself is a temporary account, so we need to zero that account back out. So before we can do that, we have to net the account. We have $14,050 over on the right side, the credit side, and then over on the left side we have $11,700. So we need to subtract. So when you take $14,050 and you subtract $11,700 from that, you end up with $23,50. So the balance falls on the side that has the larger number. So this account truly has a balance of $23.50. We need to debit this account in order for that credit balance to go away. So let's go over and look now at the third item. So we said we needed to debit the income summary account. We do that by moving this into retained earnings. So we're going to credit retained earnings. This is when we're actually moving the profit into the retained earnings account. If it were a loss, then this would show up to have a larger number on the debit side, so you would have to close out by crediting the account. But in this case, we do have a net income, and we know because of the way that the numbers fall here, and then we are actually crediting into retained earnings, which is what you do when you're moving profit in. If it were net loss, we'd be debiting retained earnings. Okay, so that is step number 3. Now number 4, so we have to now close the retained earnings account into retained earnings with a credit for the same amount. So here this account has a debit balance. We need to credit the account to make it have a zero balance. When we do, it's going to look something like this. We'll make the journal entry, which will post back to this account. We have $2,000 on both sides, so we would have a zero balance. So let's see that. Okay, fourth entry, close your dividends to retained earnings. So dividends had a debit balance. We need to credit that account. However, we also know proper form dictates that we prepare the debit side of the journal entry first. We're going to debit retained earnings for that amount, $2,000, which is a decrease to retained earnings, and that's what it should be. So here are your 4 journal entries. Let's go back to the process again and talk about that just another minute, and we'll end this video. Let me take some of these notes out so we can just draw. So what we have to do is close our temporary accounts. We close the revenue account by debiting those accounts, so we bring the total into the income summary account. So all of your credit balances will post over on all of your credit balances post over on the credit side of the income summary. All of your expense accounts are going to need to be credited. So the total of all of those are going to debit into the income summary. Now we're going to need to net this account. So first we close revenue into income summary account. Next we close expenses into the income summary account. And then there's going to be a balance in your income summary account. That balance is going to go over to retained earnings. So you move the net income or net loss, if it were, into the retained earnings account. That's step 3. And then step 4 is dividends, which needs to be credited. So it is going to move into the retained earnings account with a debit. Per all of the drawings, all of the journal entries we prepared just a moment ago. So close revenues first, close your expenses second. I suggest that you close the income summary account next so that you're all done with it. And then fourth, you come in and you will close those dividend accounts, or just one usually, that dividend account into your retained earnings. Okay, let me click over to your closing entries. These are your closing entries. If you want to pause there a minute and have another look, I put a description under each one. You don't have to do that for me. And then here are your 4 steps over on the top right. I'll pause there just a moment in case you want to have another look at those as well. Let me just highlight them so you can see them clearly. Okay, that closes this video out. So now you know how to prepare those closing entries.